So it's a flat start with the positive bias, but selectively bulls have managed to engineer a strong comeback. But earnings season is about to start the next 15 days, and expectations this time around are rather diluted. Some are blaming it on the impact of GST, others are blaming it on the volatility which currency has created for the quarter gone by. So where do we stand? Valuations versus expectations. Gautam Sinha, fund manager with Motilal Oswal Asset Management, joins us. Gautam, what do you make of the recent bout of selling? Have we corrected enough? Are we looking attractive enough, or we have still some more fundamental correction left?
Nikunj, fundamentals be what they are, I don't think, and I have maintained this again and again on your show, that I don't expect markets to correct very sharply. So the thing to do for investors would really be to buy every dip, because yeah, valuations are expensive, but with the kind of liquidity support that you have from domestic money that's coming into the markets, it's very difficult for markets to correct sharply. So what we have seen in September is that hypothesis has played out. I think FIs have sold very aggressively, almost $2 billion they have sold over 1 month, but it has completely been eclipsed by domestic buying. So it is a liquidity driven market, you have to live with that fact. But yeah, whether the broader earnings recovery happens or not, that is also a big question mark for me too. I'm quite confident about the earnings trajectory of the companies that I own, but for the broader market, I am still in the skeptical camp. I don't believe I'll be happy actually if I see a double-digit earnings growth for this year.
Gautam, hi, good morning. A 20,000 crore rupee AUM figure from the mutual fund industry last month. What is it that you're expecting this month? And when do you think that exponential growth is going to come in from here? And more importantly, you know, all this chatter that we've been hearing on an economic slowdown, although the Prime Minister said this is just a temporary blip coming in. And earnings recovery still a little far away. Do you think that could in any way be a deterrent, or do you not think so, and you think all the equity or rather domestic savings will by default flow into mutual funds because nothing else seems to be making money right now?
Yes, Asha, you know, from a longer term perspective, from a theory perspective, if you stick with stocks, the good ones especially, I think they are still the best asset class. So while we say that stocks expensive, doesn't mean that, you know, you should stay away from stocks completely. You should be selective. I think stock selection would be very, very critical. And I would agree to that broader viewpoint that this economic activity drop is a more of a blip, because, you know, we have had Demon, we have had GST. So there have been impacts of that, and one shouldn't be very judgmental about the current GDP trend. I think that's something that many people are missing. We have to live through this period and see another quarter or two down the line whether the GDP growth picks up, whether the economy is reacting the way many of the other emerging market economies are reacting, be it in terms of exports growth picking up, demand revival. I think globally growth seems to be coming back very slowly though. So India has been missing out so far, but that's largely probably because of GST and demand before that. So I think we should just be patient, wait through this period, another quarter maybe, and then really take a call whether the broader recovery happening or not. But I think from our perspective, both the retail financials, borrowing as well as savings pool, that's a standout growth area which we are very much invested in. Beyond that, oil marketing and gas plays continue to look good for us. Auto companies also continue to be, select auto companies continue to look good. So we are very selective, we are very focused on our set of companies. I think growth numbers will not disappoint in the areas that we are invested in, but I'm talking about more broader economic growth. That is something that's I think people have been losing patience on lately, but personally I think you should just give it the economy a quarter or two and then take that call.
Right. Gautam, in this sort of a market environment where, you know, one is still not sure about the growth trajectory just as yet, and that has an impact on the earnings projections as well. We are stepping into a festive season. Actually, we've seen part of it already. what are you hoping the second half would do in terms of making one more optimistic about recovery from here?
Yeah, I think two aspects that I'll be watching out for is, if you see, one of the most promising recovery stories that this government has is the focus on affordable housing. And I am really watching out on that space whether the supply side reacts. I think there is enough demand given the interest subvention that is there. Whether the supply side, the infrastructure built up around for mass affordable housing, that starts happening on a national scale. It's been happening in select states, but we're not seeing evidence of a national build out happening. It takes time, you know, once such large schemes are floated, it takes time before the reaction happens. We are optimistic about it, but we are waiting to see signs on the ground of affordable housing picking up. I think that will be a big story on the economic recovery side, because housing construction as a sector has huge multiplier effects on the rest of the economy. The other thing that I actually would be watching out for is recovery in exports, because I believe that globally we are seeing that happening, that start to happening, and in India too we are seeing some good numbers on the export side, but I think that there is much more room for us to improve in sectors like textiles, maybe even engineering, auto parts. So if we see exports growth picking up in the second half, that's something that I would watch out for, and I think that these two, exports and affordable housing, in my mind could lead to the next round of broad-based growth for the economy.
So, is it time to look at wholesale banks now? You don't own wholesale banks. Are you tempted to just look at an ICICI bank or an Axis bank because they are cheap? And if you're bullish on economy, if you're bullish on exports, things would look up.
Yes, so as I said, Nikunj, you're right, the valuation part is definitely exciting, but what I would also watch out for is the actual ground level recovery to work out, and then take that call. Any day, retail financials are preferred for our style of investing, where we are looking for long-term compounding. But yes, from a valuation perspective, today corporate banks are way cheaper. We don't see the provisioning cycle bottoming out yet necessarily, so that's a concern. But yes, the other concern is pickup in growth on the asset side, and if that starts playing out, then these stories will start looking much more exciting than they're looking today.
Insurance stock in your portfolio?
Yes, insurance is again another sector that's we are very bullish on. We continue to be very bullish on. While we have owned life insurance, we are getting quite a few general insurance listings happening now, which is another, again, a very nascent sector. Less than 1% of GDP. Penetration levels are very low, both from a macro data when you look at the penetration data itself, and even anecdotally when you speak to people, general insurance penetration is extremely low. And this is a very good business. This is the kind of business that we like to invest in. I believe there is very good scope of finding long-term compounders in this space. So yes, insurance, the entire amount of paper that's coming out in the insurance sector is definitely a good opportunity for long-term India investors.
You owned HPCL and it is still there in your last declared portfolio, which I looked at it. Now this one-time re-rating which oil marketing companies enjoyed because fuel prices were deregulated, do you think that bulk of that one-time re-rating is behind us, and now you're pretty much buying them for earnings growth, and earnings growth always unpredictable for oil marketing companies, because sometimes there's inventory gain, sometimes there's inventory loss. One quarter refinery margins may surprise you, another quarter they may disappoint you. All I'm trying to ask from you is that, do you think best of the gains in OMCs are they behind us now?
Actually, I'd put it the other way. I think the best of earnings recovery in OMCs is behind us for sure. The way their earnings has grown multifold over the last 3 years, that's not going to get repeated going forward. Because earnings were growing at such a high pace, I don't think multiple expansion really happened that much meaningfully. So these are stocks which are still at early double digit or a high single digit kind of P multiples. So there is room for P re-rating here for sure. This is one sector where my call is that P re-rating potential is there. The refining side is necessarily a low P business, but if you strip out the marketing side and if you believe that they have a fair degree of pricing power, which they have been demonstrating over the last 2 years, then definitely the marketing engines should get higher P than what they are getting today, and that's our fundamental thesis. What can go wrong here is if we find suddenly that they don't really have the freedom to price effectively, but I think that's something that the market is already pricing in while giving it the kind of P that they are getting. And I'd like to, while these kind of comparisons might not be fair, but if you look at the retailing companies that recently have listed or have been listed around for a while, anyone who makes even an iota of profits gets triple digit P's. So the dichotomy between the P of the marketing engines of oil marketing companies and the P's of other retailers is simply too high. The Jasmine valuation is too high. So both should correct, both should mean revert, because I don't think oil marketing companies, the marketing engines are going away anywhere soon. Electric vehicles are still very far off in the horizon. There's plenty of room for growth too in the marketing arms of these companies.
Right. Gautam, it's great to have you on the show. Thanks very much for taking out the time to speak with us and discuss with us your thoughts towards investing in this market, especially finding value.
Thank you.
Okay, well, it's 10:30, a little over that. Do we head into a break very quickly? Take a break. The market is holding out pretty nicely actually. It's sideways today. But sideways is good as well, as long as we're maintaining critical levels, 9900 particularly on the Nifty.